Hello traders and investors, welcome back to the Trend Trader channel. In today's video, we're going to be looking at the companies that will be releasing their earnings in this upcoming week. Some of these companies are listed in the New York Security Exchange, while others are listed in the Nasdaq. So we are looking at companies that are trading in the US. There are a lot of companies that will be releasing their earnings, but we are only interested in a few. The few that we are interested in have the kind of chart that we'll be looking for, or the kind of price action that we'll be looking for whenever we are buying a stock. So in the timestamp below, you will see that there is a timestamp for different companies that we cover. So if there's a specific company that you're interested in, just feel free to jump into that particular part of the video. And before we start, I would like to ask those who haven't subscribed to please consider subscribing, especially if you find value in the kind of content that we are sharing in this channel. And before we start, I would like to ask those who haven't subscribed to please consider subscribing, especially if you find value in the kind of content that we are sharing in this channel. So the first company that we are looking at is also trading in South Africa. It has a very long name, but it is called KAROOOO or KAROOOO. So, well, I'm a South African, so I think it's called the KAROOOO because we do have a place called the KAROOOO. It's a company that has been performing well for quite some time. You can see there was that nice movement there since just the beginning of 2024. The stock has been moving up. Somewhere it traded just slightly below 24 US dollars. You can see now it's at $43, meaning that in the period year to date, the stock has almost doubled its price. They sell different fleet solutions. So some people, they do need to have a tracker. So we believe that the business model is good, but we're not here to discuss fundamental analysis. We are here to discuss technical analysis. So what do we see here? Basically, you see last week the stock, it had a high volume when it had that breakout above this level. So in our view, this is a good thing. If there were no earnings report, we would expect the stock to continue to move trading up, especially if there are buyers pushing the price up. But we are keeping an eye on the stock. At this moment, we believe that the stock is more likely to continue to grow, especially if you look at the previous earnings report from the company. Okay, now we can move on to another company. So we're going to be looking at the Bank of America. Overall, in the US, the financial sector, there are companies that have performed relatively well. So if you're looking at any of the banks in the US, you are probably going to see some kind of similar charts. In this case, we're looking at the Bank of America Corporation. But also if you look at Citibank has a similar price action that we see in the Bank of America. So if you decide to buy a bank, an American bank, well, most of them are showing similar setup, so it's better to decide which of those banks you're going to buy instead of buying all the banks, because in terms of setup, the setups are similar. So chances are, if they work, they're all going to work. If they don't work, they're all not going to work. So there's no point over diversifying. So what do we see here with the Bank of America? Again, the share price is moving up. Since there was a pullback there just after July, and then the stock recovered. You can see that the stock broke above this consolidation level last week. Again, it also happened with a decent amount of volume. So for last week, this would have been this level would have been an ideal entry level, but it happens that we miss those kinds of setup. So now we are looking at this horizontal resistance level. So if the stock breaks above this level, this is also another opportunity to place a buy stop order in order to have a position in the Bank of America. Okay, so we're gonna move on and look at a different stock, PGR, which is a Progressive Corporation. Again, the stock has just been moving up. You can see that it did break those previous resistance level, and then so far it has been trading up. Again, there was a bit of a consolidation here, so we'll be looking for a breakout above this line, above this level, somewhere around 260 US dollar. And if that move happened, then chances are the stock is going to continue to climb further up there. But as things stand, we like that the stock is in a nice uptrend. Yes, the stock will stop every now and then to consolidate and then break above, trade up, consolidate, another breakout, and then there's going to be a couple of consolidation, right? So that is something that you need to keep in mind. But you can see here, if the stock already has had a couple of consolidation, and this consolidation came quicker compared to that previous consolidation. There's nothing that can stop the stock from trading up there, but also there's nothing that can make the stock to trade below this level, especially to come and retest this rising moving average there. So those are two potential things that can happen with this particular stock. So whenever we do technical analysis, you need to plan for the upside and also plan for the downside, because there is no move that is guaranteed. Again, going back to banks, we are looking at Goldman Sachs. This chart we prefer, we like it. It looks much better than the Bank of America. We're not taking anything from the Bank of America. It's just that this chart looks much better. Why do we like this chart? You can see that the stock is already trying to break above this consolidation level. You can see there was a breakout, a retest, and then that attempt on the breakout. Even though the volume is not the biggest volume, I mean, if you're looking at the recent average volume there, it's not the biggest volume, but there is a breakout that is happening there. So for us, we consider this to be a low risk entry, especially if you set a stop loss just below the recent low when that breakout happened, or just before that breakout happened. So with respect to Goldman Sachs, we expect the stock to continue to move further up. However, again, the stock can still pull back. That is why it is important for us to always have a stop loss whenever we think of taking a position. And then there's stock called ePac. Again, I don't know what ePac does, but there's something that I want to talk about with this particular stock. So now what we see with ePac, we are looking at the weekly time frame. But if I switch to a monthly time frame, which is a longer period compared to the period that we are looking at. So one thing that is worth noticing here is that the stock is trading at a multi-year high, meaning that you can see this level. There was a time somewhere around 2008 when it traded just slightly above $32 per share, and then it attempted again somewhere around 2013, and then it pulled back. And then now there's this attempt that has happened here. Well, I'm not going to count the candles, so I'm just going to assume that it is somewhere around 2024. So we like to see this multi-year high. It does not guarantee anything anyway. However, we anticipate the share price of ePac to continue to move up, even if it's a long-term position. Doesn't matter what kind of long term you define. If you have a stop just somewhere here above 32.50 or 33, and then in terms of risk, that means your price difference is going to be about $10. So you'll be risking about $10 on this particular position, and then you can hold the stock in anticipation that it is continue to move further up. We've seen this setup play in other companies. Some it has played successfully, while with other companies, well, the stocks they did pull back a bit. Again, nothing is guaranteed in the market. You need to plan for both the upside and the downside, because you don't know which move is going to pan out. So that I wanted to use ePac as an example that you should anticipate different outcomes and plan for both outcomes. And then now looking at KMI, the chart looks fine. However, what another thing that we want to highlight with this chart KMI, we believe that insider trading, it happens everywhere. You're not saying that KMI investors or shareholders are involved in insider trading. What we want to highlight is that the share price, as it approached this resistance level, you can see that there was some heavy buying that was happening here. You can also see how big these two recent candles are. That shows that there are plenty of people buying this particular stock. Obviously, people will buy any shares for whatsoever reason. In this case, this company is going to be releasing its earnings report. There are people who already have an idea what kind of information is going to come. Some of those people, they may be acting on that particular kind of information. So number one, you need to keep in mind that insider trading, it happens. But the point of this video is to show you that whenever a stock is approaching a breakout level. If that breakout happens successfully, you can see a rapid price movement, and you can see here the distance that the share price has traveled. Well, we are looking at a log transformed chart, so the breakout happened just above 2150, and then the stock quickly rallied to 2470. So in a matter of 2 weeks, this would have been a nice profit to make there and pocket. So with all the charts that we have shown you so far, or maybe that we have shown you in our previous videos, the best case scenario is that once the stock break above that resistance level, it quickly rise up. Because the reason why we expect it to quickly rise up is because it is coming onto a new territory. There is no resistance levels there where people will be maybe expecting the price to pull back a bit, so people will start to sell some of the shares as they approach the previous resistance level. We always talk about following the path of least resistance, so this is a perfect example of the path of least resistance. Okay, so I think we've said a lot with respect to this company. We still live in the age of AI. We've got a lot of AI things happening, but AI is not AI without microchips. There are companies that design microchips. There are companies that fabricate microchips. So we're looking at Taiwan Semiconductor, which is a company that fabricates microchips. You can see again, TSM is at the resistance level. If you think of what we just shown you now with the chart of KMI, we're not saying that the same thing is going to happen, but do pay attention to this volume. You can see for the previous weeks, they've just been buyers of this stock. Obviously, maybe they took advantage of this particular pullback and then started to buy. But now we won't be surprised if we see an explosive move on the upside there. Then we can anticipate the share price to go up. Base case scenario is that it happens with a bigger volume, that to show that people are really buying this particular stock. So for us, this is a nice stock where we could have a nice buy stop order. But remember, when it comes to earnings, things can always go sideways. So if you are impatient, you want to buy now before the earnings come, do keep in mind that it is also possible that the news could be negative, or it could be interpreted negative, and then you can see the share price dive. And when it dive where it is likely to dive to, you can see that there's that nice moving average there. Sometimes the moving average can act as a potential support level in this particular case, but when the share price is moving down, the moving average can also act as a resistance level. So that is something that you should keep in mind. But long story short, we like this kind of setup, and we will be playing a position here. And then the second last stock that we want to talk about is Netflix. We do have a position on Netflix. We've been trading Netflix for quite some time now. So again, what we are looking at here, we are looking at a multi-year high that is happening there. Don't mind that squick line, but at 722 there was that previous high somewhere around $700 per share before the stock dived all the way to somewhere around $180. We know whenever a stock crashes, everybody wish that they had bought at the bottom. We won't judge you. If you had bought somewhere around this level, you would have made a lot of money coming back to where the share price is currently at. But we are not here to wish for things that we did not do in the past. We're just going to look at where the share price is at the moment. Again, something to keep in mind, we are at a multi-year high. It's a new all-time high for the particular stock. The consolidation, it may or may not have happened, but you can see there was a time when the price was struggling to break above this level. So that was somewhere around $700 per share. Now the share price is at 720. Well, it's still near that breakout level. Anything can happen. Again, we're anticipating for an upward movement. We're happy with the position. We're not saying that the stock is guaranteed that it is going to move up. And then finally, we're looking at American Express. So it's another company that has done well. If you think of American Express, think of Visa, think of MasterCard, those payment companies. Their share price, they tend to move nicely. Yes, we are happy with this move somewhere around November 2023, just coming somewhere around $157, coming all the way to $276. Yes, a lot of money has been made already here, but just because the share price has went up does not mean that it cannot rise further up there. So that is another opportunity to buy the stock. We don't have a position here, but it is something that you can keep in mind. So that's it for this week. We just look at the chart of the companies that will be releasing their earnings report this coming week. We just strictly did technical analysis, no fundamental analysis whatsoever. So you can take this information, do your own research, supplement it, and then be able to make your own decision whether you want to trade these stocks or to invest in these companies. Nothing that is shared on this channel should be considered as an investing or trading advice. We are simply sharing what we see on the screen. Okay, so that's it for today. Thanks again for watching. If you haven't subscribed, please consider subscribing. Feel free to like, share. If you have any comments or suggestions, leave them in the comment section. We'll see you on the next video.